2 years ago, Fort Myers was the poster child of Florida's unstoppable housing boom. Now, home values have crashed by over 12%. Condo listings have soared nearly 40%, and more than half of sellers are slashing their prices in desperation. With families losing homes, $150,000 wiped out in single sales, and 8% of owners now underwater, the once confident governor of Florida is spiraling in the face of a historic crisis they can't contain. Is the meltdown in Fort Myers just the first spark in a nationwide housing disaster fueled by America's broken system? Or could the situation still get even worse? The answer starts with the devastation left behind. Fort Myers is now ground zero for a housing collapse that few saw coming. Since July 2024, the median home price has tumbled 12.2%, erasing years of appreciation in just 12 months. Condo listings have exploded, up 37.2% year over year. Single-family homes are flooding the market too, with inventory rising 24.3%. Sellers who once held out for bidding wars are now slashing prices. Over 52% of all listings have been reduced, double the national average. Rows of for sale signs line the streets, each one a signal of mounting desperation. The numbers paint a bleak picture. In July 2025, more than 14,500 homes sat unsold across Cape Coral and Fort Myers, a figure not seen since the aftermath of the last market crash. Just 2 years ago, that number was under 5,600. Now, entire neighborhoods that once buzzed with new arrivals are dotted with empty driveways and neglected lawns. Homes purchased at the peak, when prices soared 75% during the pandemic boom, are now worth a fraction of that high water mark. Some investors have seen $150,000 or more wiped out in a single sale. The pace of decline is accelerating. In early 2025, prices dropped month after month, 6.5% in February, 7.1% in March, then 7.8% in April. National housing trackers rank Fort Myers among the worst performing markets in the country. The spread between asking and sale prices has widened, making it nearly impossible for appraisers to find comparable sales. In many cases, sellers are forced to accept offers tens of thousands below what they owe just to avoid foreclosure. Behind these statistics is a market in freefall. Inventory continues to outpace demand. Investors who bulk bought during the boom are now offloading properties at steep losses. Many have simply walked away. For every new listing, there are fewer qualified buyers able or willing to take on the risk. The collapse is not contained to one segment. Condos, single-family homes, luxury properties, and starter homes are all trapped in the same downward spiral. The Fort Myers crash is no longer just a warning sign. It's a reality that's rewriting the rules for the entire state. A single missed payment was all it took for the Rodriguez family to lose their home. They bought in 2022, at the height of the frenzy, believing they had found a forever house. But by the spring of 2025, insurance premiums had tripled, property taxes soared, and their adjustable mortgage reset to over 7%. The monthly bills climbed past $4,600, far beyond their combined income. When the insurance company demanded $12,000 upfront to renew, their savings vanished. The eviction notice arrived in June. Forced to sell at a $150,000 loss, they packed up 2 years of memories and left behind a street lined with empty driveways. The Rodriguez family is not alone. Nearly 8% of homeowners in Fort Myers now owe more than their homes are worth, a figure that dwarfs the national average. For these families, selling means bringing cash to the table, money they don't have. Many simply walk away, leaving banks to foreclose and neighborhoods to empty out. The cost of keeping a home here has become unmanageable. Experts estimate it takes $55,000 a year just to cover mortgage, taxes, insurance, and HOA fees for a typical property. Double the local median income. The ripple effect is everywhere. Local builders who once juggled wait lists now face canceled contracts and half-finished projects. Layoffs have swept through small construction firms and trades. Electricians, roofers, and landscapers who thrived during the boom now scramble for odd jobs or leave the area entirely. The parking lot at the Lee County Job Center fills up early each morning with workers hoping for a break. Behind the headlines, the collapse is measured in lost homes, fractured communities, and dreams put on hold. The for sale signs are more than just markers of a market in trouble. They're reminders of families uprooted, savings wiped out, and livelihoods erased. As the costs of staying climb higher each month, the sense of security that once came with homeownership in Fort Myers is gone. The story unfolding here is not just about property values or statistics. It's about the human cost of a system that promised stability but delivered crisis. Monthly mortgage bills in Fort Myers aren't just rising, they're ballooning in ways that few homeowners saw coming. The numbers behind the payment shock tell a story of mounting pressure, one line item at a time. In 2022, a typical homeowner with a $350,000 property paid about $3,000 a year for insurance. By 2025, that annual premium has jumped to $5,376, pushing the monthly escrow from $250 to nearly $450. For anyone caught off guard by the renewal, the shortfall doesn't just spread out quietly. Servicers demand a catch-up, sometimes tacking on another $150 or $200 a month for the next 6 months, just to fill the gap. Suddenly, what was once a manageable $2,400 payment has swelled past $2,900. These mechanics ripple through the system. Mortgage servicers, responsible for collecting monthly payments and paying taxes and insurance, are now scrambling to keep up with the pace of premium hikes. When escrow accounts come up short, servicers are required to raise payments immediately or risk falling behind on insurance. If a homeowner can't pay the new amount, the account is flagged. Delinquencies have spiked. Industry data points to a 30 to 40% jump in escrow-driven delinquencies in Lee County and surrounding areas since late 2023. That's not just a statistic, it's thousands of families missing payments, not because of reckless spending, but because the bills changed overnight. Appraisers are caught in the middle. As values drop and comparable sales vanish, deals stall. Lenders won't approve new loans without reliable appraisals, and buyers can't close if the numbers don't line up. The result is a kind of gridlock. Homes linger unsold, deals collapse at the last minute, and sellers are forced to drop prices again and again. The liquidity that once fueled bidding wars has evaporated. Cash buyers have retreated, and traditional buyers face a gauntlet of new hurdles: higher payments, stricter lending standards, and shrinking access to affordable coverage. For some, the pressure cooker explodes with a single missed payment. Servicers send out warning letters, then certified notices. If the account isn't brought current, foreclosure proceedings begin. In neighborhoods across Fort Myers, the cycle repeats. A spike in escrow, a missed payment, and another home added to the growing pile of distress sales. Behind the scenes, servicers and lenders are quietly bracing for more defaults. The mechanics of the crash aren't just about falling prices. They're about a system where every cost increase gets passed down the line until someone, somewhere, can't pay. That's the choke point now freezing the market, one family at a time. By the summer of 2020, Fort Myers became a magnet for buyers chasing a new version of the American dream. Mortgage rates dipped below 3% for the first time in decades, unlocking a wave of cheap credit. Remote workers, newly freed from city offices, scoured listings from Boston, Chicago, and New York, searching for sun, space, and the promise of a backyard. Retirees arrived in caravans, drawn by the lure of no state income tax and the hope of stretching fixed incomes in a place where winters never come. The numbers from that period are staggering. Between early 2020 and late 2022, home prices in Fort Myers soared by 75%. Median sale prices topped $575,000 in some neighborhoods, up from barely $330,000 just 2 years earlier. Streets that once sat quiet in the off-season were suddenly packed year-round, as out-of-state plates filled driveways and new construction raced to keep up with demand. Builders broke ground on entire subdivisions, betting that the migration would never slow. Behind the scenes, institutional investors moved in. Blackstone, Invitation Homes, and other Wall Street-backed firms snapped up thousands of properties across South Florida, often paying cash and outbidding local families. The logic was simple: buy in bulk, rent at a premium, and watch values rise. Their presence fueled bidding wars and pushed prices even higher, pricing out first-time buyers and long-time residents alike. For individual homeowners, the fear of missing out became irresistible. Stories spread of neighbors who sold for double what they had paid just a few years earlier. Some took out home equity lines, expecting values to keep climbing. Others bought second homes, hoping to cash in on the short-term rental boom. Tax policy played its part. Florida's lack of a state income tax and relatively modest property taxes, compared to the Northeast, made the math work for families and investors alike. The narrative of affordable luxury, beach access, new amenities, and a low tax bill was irresistible. Marketing campaigns branded Fort Myers as the next great escape, a place where anyone could start over and build wealth. But the foundation of this boom was always fragile. The surge in demand wasn't matched by wage growth for locals. Many buyers relied on adjustable-rate mortgages or minimal down payments, betting that appreciation would cover any risk. As prices soared, so did expectations. The system rewarded speculation and volume, not stability. By late 2022, signs of strain began to appear. Homes flipped multiple times in a single year, rental rates stretched household budgets, and investors started to whisper about the limits of the market's appetite. The stage was set for a reckoning, one built on policies and incentives that favored growth at any cost, with little thought for what might happen when the music stopped.
Institutional investors made their move at the height of the frenzy, snapping up entire blocks of homes in Fort Myers with cash offers that pushed prices beyond the reach of local families. In 2021 and 2022, firms like Blackstone and Invitation Homes bought thousands of properties across South Florida, often sight unseen. The plan was simple: buy in bulk, rent at a premium, and ride the wave of endless appreciation. But as the market turned, the math flipped. By mid-2025, those same investors were unloading homes at a loss, with some portfolios suffering write-downs in the tens of millions. Bulk listings hit the market in waves, flooding neighborhoods with identical homes and forcing prices down faster than individual sellers could react. For every property offloaded, another vacancy appeared. The supply glut grew, and the leverage that once powered Wall Street's Florida playbook became a trapdoor. Local buyers found themselves competing not with each other, but with the aftermath of a failed speculation engine, as institutional capital retreated and left behind a market straining under its own weight.
Insurance bills are now the silent detonator beneath Florida's housing collapse. Premiums that once hovered near $2,000 a year have exploded. Some Fort Myers homeowners now face annual bills topping $16,000. The reason isn't just more storms. It's a chain reaction that starts far above the state line. Global reinsurance giants, burned by billion-dollar hurricane losses, have hiked their rates 30 to 50% since 2022. Private insurers, unable to shoulder the risk or the cost, have pulled out in waves. State Farm and Farmers left by 2023, dropping tens of thousands of policies and leaving entire neighborhoods scrambling for coverage. With each carrier exit, Citizens Property Insurance, the state's last resort insurer, has ballooned in size. By late 2024, Citizens covered more than 1.3 million homes, triple its count from just 5 years before. But Citizens isn't a safety net. Its rates are climbing too, and its reserves are stretched thin. For many, getting dropped by a private insurer means an instant premium spike, sometimes 2 or 3 times the old bill. The result? Monthly payments jump overnight, pushing families already on the edge into default. As insurance costs spiral, the promise of affordable homeownership in Florida is collapsing under its own weight. In March 2025, the governor gambled on a sweeping proposal to abolish property taxes statewide, offering $1,000 rebate checks to homeowners and promising relief that never materialized. The announcement rushed out as foreclosure filings spiked and local budgets teetered. triggered chaos behind closed doors. Staffers traded urgent messages about revenue shortfalls, and city leaders warned of cuts to schools and emergency services. The governor's office, once unified in public, fractured under the pressure. Advisors scrambled to justify the plan's math, while donor meetings stacked up on the calendar. Real estate PAC contributions surged, with campaign accounts swelling in the weeks after the tax plan went public. Meanwhile, analysts warned that eliminating property taxes would gut local funding, forcing cities to hike sales taxes or slash basic services. By midsummer, leaked budget memos described a crisis of confidence inside the administration. The governor's approval ratings slid in foreclosure hotspots, and national headlines questioned whether Florida was on the verge of fiscal collapse. With the state's largest housing markets in freefall and policy fixes devolving into political theater, the warning was clear. The same cracks threatening Fort Myers could fracture cities across America if nothing changes.
In July 2025, Fort Myers home prices plunged 12.2% year over year, while more than half of listings faced price cuts and 8% of homeowners were underwater. The roots of this crisis date to the pandemic boom, when prices surged 75% in just 2 years, driven by remote buyers and cheap credit. As costs soared, property insurance premiums jumping from $2,000 to $16,000, local families lost homes, builders faced layoffs, and Florida's largest insurer, Citizens, swelled past 1.3 million policies. Official records show the governor's office proposed abolishing property taxes, as internal documents revealed staff alarm and a spike in political donations. Yet, many details of decision-making behind closed doors remain undisclosed. What's clear, systemic flaws in the American housing and insurance framework fueled this collapse, and similar conditions exist in cities nationwide. The Fort Myers crisis stands as a documented warning. Without structural reform, these failures are likely to repeat elsewhere.